Hi, I'm Colleen O'Connell-Campbell, Wealth Advisor at RBC Dominion Securities and host of the Cash Rich Exit podcast. We're here with a small insurance series, and I'm joined by Tania Guido, an estate planning specialist with RBC Wealth Management Financial Services. Tania has over 30 years in financial services experience and is known for a thoughtful, transparent approach to insurance planning, helping clients and their advisors, like me, make confident decisions around personal and corporate strategies. Okay, so if you've been following along, you will know that I've recorded with Tania a video talking about corporate tax-free savings accounts. And what does that all mean? I'm going to say go jump to that particular video and have a little watch. Essentially, though, there's an aspect of that concept that requires you to have a bit of an understanding of a tax concept called the Capital Dividend Account, or CDA. So today is a plain English layperson's conversation about what a CDA is and why it's relevant to insurance policies and planning. Now, before we jump in, a quick compliance note. This video is for general information and education only. It is not legal accounting, estate planning, tax, or insurance advice. Please review the full disclaimer on the screen, in the notes, in the description, and speak to your professional advisors about your specific situation. Okay, with all that aside, Tania, we're back.
Hello, hello.
Yes, so in a previous video, we talked about at a very high level what is this thing called a corporate tax-free savings account, which uses whole life or universal life to create basically a tax preferred strategy that will provide a legacy payout. And part of that tax part of an insurance policy and how we actually get to flow that money out is this tax concept called, or a tax notional tax thing called a
Yeah,
CDA yeah, I know I'm laughing because most people don't really know what it is, and that's why I thought it would be important to talk about it. But a capital dividend account. So, what is a capital dividend account, and why should incorporated business owners care about what this is?
yeah. So again, I want to preface, I'm not a tax accountant, okay? So I'm going to really keep this simple. Think of your capital dividend account. I'm going to keep saying CDA because it's just a lot easier to
Yeah,
flow.
it's not such a
Um,
mouthful.
exactly. Is a notional account. Okay. It is managed by your accountant, first and foremost. So think of it as like a running balance sheet. Okay. There are certain things that go on this CDA balance sheet, I'll call it, that allows money to come out of your corporation tax free. There's not very many things that can happen that allows money to come out tax free. But the one thing that, because we're talking about it, the one thing that I'm going to comment on is life insurance. So
Mhm.
essentially, every insurance policy has what's called an adjusted cost basis to it. Okay. That is the set amount inside of everybody's policies. In permanent policies, you've got a starting number, it peaks at a certain point, and after that peak, every year thereafter, it basically goes down to zero. Okay. And that's going to take about until life expectancy. So if I just put everything into context now, if I have $1 million life insurance policy, that's going to come into my corporation tax free. Okay. Because all life insurance does that. But now for my, beneficiaries, if they want to take some of that money out, they can take it out through the CDA. And how much can come out of the CDA for the life insurance part is going to be everything in, so the $1 million less whatever is left of the adjusted cost base. Okay, so just for example, if I have $100,000 left as an adjusted cost base, my beneficiaries is able to take out $900,000 tax-free out of the corporation, and then the dividend would have to be paid on the 100,000 that's left. That has to be taxed out of the corporation. So once again, it's really just a running balance sheet. Your accountant takes care of that. But for insurance, I wanted to highlight exactly how that is calculated very briefly on monies coming into the corp and money coming out of the corp through the CDA.
Okay. So given that,
Yes.
what questions do you think as a business owner I should ask my accountant when I'm trying to learn about the CDA and then in specifically as it's related to insurance?
Right. I mean, so I think number one is making sure your accountant knows about this. I've never run into any accountant, of course, that doesn't know about the CDA. That's what they do. That's their expertise. So, understanding how it works and how it can benefit you is going to be extremely important. So, what is my balance? Like that's kind of like your primary question. What is my balance, my CDA balance? And how did it get there, right? Maybe understand what transpired that created this balance outside of life insurance. Because, like I said, there are other things.
Mm-hmm.
In
Which we're not
particular, to
touching on, which we're not, it's
no,
outside the scope of this video and our professional responsibility, no, competency. Anyway, it's not in our profession.
yeah, yeah, exactly. That's your accountant. So then it's really, talking about that at life insurance is how does, understand it from your accountant, because again, referencing our previous topic on corporate TFSA, we talked about, ensuring that you've got your team, your professional team around you. And this is going to be important to, again, where the accountant's going to come in and really help understand, how the insurance can help the business or the estate planning of it, and how does the CDA work with the insurance payout, I think is going to be really important. And ultimately, like, how do those proceeds flow maybe into the CDA and then out of the CDA to your beneficiary. So I think it's just really understanding that account from your accountant, and just understanding, so that your other parties of your family understand that when, the person has passed away and now they're trying to manage the full estate.
Right. And what what misunderstandings around CDA have you seen that could, how can lead to planning mistakes? You've been around the industry a long time. I know you must have a few horror stories.
I mean, I think that, the one thing is when we talk to clients, and I think back to a client that I spoke to just after Christmas time. I was sitting with him and his accountant, um, and he had insurance already. Okay, so he, again, he was in a position where he was like liking to get more, but he didn't really fully understand the CDA. She truly thought that inside of the corporation and this insurance policy being held by his corporation, all of the money that would pay out on his passing is tax free. So I think the misunderstanding from a corporate insurance perspective is probably, I don't want to use the word mistake, but I just think that that's where it doesn't come together and the understanding doesn't come together. So it's just a little bit of a misconception, if you will. And, they don't think about CDA because that's for different things, or they just don't even know that that exists for their
Right.
corporation.
Or marketing has been a little
Yeah.
too friendly. I mean, we certainly want you to consider how an insurance policy might fit all of your needs, and then going back to previous videos where we talked about risk and then where we talked about the corporate TFSA. So it's appropriate, but you have to know how all the pieces of the puzzle fit together and the advice of your whole team, right? Essentially is what it
Yeah.
comes down to. Yeah, so again, this topic is not necessarily where Tanya and I bring the most expertise. This is a topic that deserves the attention of your accountant. But if you're an incorporated wealth building mindset oriented business owner, then understanding the basics of your CDA is worth your time. And we hope we tweaked you to garner more insight into how that fits into your overall plan. And if you'd like to investigate a little bit further, happy to have a conversation with you. Maybe look at your wealth gap, maybe look at, again, how insurance might provide you with exactly the tool that you need. You can reach me at colleen.campbell@RBC, or feel free to send me a direct message on LinkedIn, Colleen O'Connell-Campbell. And listen, all opinions expressed by me and any guests here in this video series are solely their own and do not reflect the opinion of RBC Dominion Securities. This video is for information purposes only. Before acting on anything you hear or see, consult a qualified professional. Insurance products are offered through RBC Wealth Management Financial Services, Inc., a subsidiary of RBC Dominion Securities. And this content is produced with Canadian residents in the province of Ontario in mind. I'm a wealth advisor at RBC Dominion Securities, a member of the Canadian Investor Protection Fund.